This is too good not to share. Did you know you can use the equity in your home to renovate your home? It's a really cool, easy process, and I want to tell you all about it. First of all, you have to understand what equity is. Equity is the difference between what your house is currently worth and how much you owe on it. That's equity in your home. If your home is worth $500,000 and you currently owe $400,000, you have $100,000 worth of equity in your home. Congratulations. But how do you get access to that equity? You may have purchased that equity by putting a down payment on your $500,000 home of $100,000. Now you only owe $400,000, but you have $100,000 tied up in your home and you want to renovate. You want to make your home look like this with beautiful new walls, nice new paint, wonderful new flooring. So how do you get access to that equity? There are a few ways to do it. If you've owned your home for a while and your interest rate is already really low, like in the 2s or 3s or even 4%, you probably don't want to change your primary loan. If that's the case, you need a secondary loan, such as a second mortgage or what we call a home equity line of credit. Those loans take second lien position behind your primary mortgage. That makes them a little more risky than your primary mortgage, which means the rates are going to be a little bit higher. But if you have a $300,000 loan or a 3% loan on a $400,000 balance, you don't want to pay that 3% off with a new 6.5% loan just to get $50,000 out to do the work that you have to do. So if you have a great interest rate, you're probably looking at the HELOC or the second mortgage. Maybe you just bought your house a year ago and it was a fixer-upper and you're ready to do some work on it. You put a big down payment down. Let's say you bought that $500,000 house, but you put $250,000 down. So you only owe $250,000, and now you need to access $100,000 to do the repairs to modernize your home. We can do that through what we call a cash out refinance. A cash out refinance will pay off the 7.5% or maybe even 8% rate that you currently have on the loan you took out and get you another $100,000 to use to renovate your home. All of that at today's rates may get you somewhere in the 6s. That means you're taking the $250,000 that you have borrowed at 7.5% and you're reducing that to 6.5%, plus you're getting an additional $100,000 also at the 6.5%. So if your rate is higher than the current rates, it's a good idea to look at a cash out refinance to get access to that equity. But if your rate is lower than the current rates, go back to scenario 1 and we can talk about a second mortgage or a home equity line of credit. The bottom line is, if you're buying a house that's a fixer-upper, you may want to just keep your equity in your pocket and not put as much in your down payment. If you were planning on doing 30% down, maybe you only want to do a 10% down payment, and 20% of that equity you keep in the bank to finance your repairs. All the time we get asked the question, can I get access to money out of my house to do those repairs? The answer to the question is most of the time you can, especially if you have significant equity. But the best way to know for sure is to DM me right now. You can DM me and just say home improvements, and I'll know exactly what you're talking about, and we can start some dialogue on how you can access the equity in your home to fix it up.